our panel is going to discuss the Bitcoin versus gold debate. So I'm going to turn it over to you and let you all introduce yourselves. Welcome.
Thanks a lot. Thanks a lot. Amazing to be here. Second time on the stage moderating a panel. I had the honor to have the first panel and the last panel of the day. How do you like your stay in Hamburg so far? I did that earlier today to see how that works. I would have to share before that I'm born and bred Hamburg native. So I asked that again. How do you like your stay in Hamburg so far? Awesome. Much better. So, closing panel today is the Bitcoin versus gold debate, the celebrity death match of the two inflation hedges out there, which is Bitcoin and gold, obviously. So, starting in, I would like to have my panelists introduce themselves. Obviously, Peter, he really don't need no introduction, but I give you the room.
Thank you.
Peter, can you give me some...
Oh, I thought you were going to introduce me.
Yeah, just what are you doing, what your background is while you're sitting here on the stage? For those
well, I'm sitting here because you guys invited me. Although, when I was first invited, the temptation was that Michael Saylor was going to be here. And I was going to be able to do a Bitcoin gold debate with him. And he had been avoiding me for years. I thought, oh, this could be good. But not only did Saylor turn down the invitation, but he ended up canceling the entire event. Probably because he knew I'd be here. And he didn't want to have to, he knew I'd track him down or something. So somebody has taken the Saylor position.
So we have Olga.
Not quite, but okay.
That's probably going to be me, because I don't know, 5 years ago, Forbes gave me the title of Bitcoin Queen. Later it became kind of like, But yeah, going to be your Bitcoin lovely lady.
Nemesis.
So you're the Saylor stand-in.
Exactly, female sailor. Good. So
Olga,
once I introduce myself, okay, guys. So I'm founder and board chairman of Smart Valor. Smart Valor is a Switzerland-based digital asset exchange listed on Nasdaq, the only one listed on Nasdaq from Europe. What do we do? Well, crypto exchange. What got me in crypto? Was that the question?
On?
What got me in crypto, right? You wanted to ask. Well, actually the Greek crisis, the Cyprian, Greek, sovereign debt crisis in 2013. So back then, Greek banks and Cyprian bank went into almost default situation. And back then, Bitcoin went from $30 to 60 to 90 within several weeks. And that was the moment for me. I thought well, now I buy. And that was the beginning of my journey.
It's basically what we have at the most blockchain conference to really getting to know the person is the Genesis block, what brought you into the space, what piqued your interest. So it's always great sharing that. Peter, I don't know if you probably wouldn't have the Genesis block for crypto because you're standing here for the gold side. But just maybe you can share as well when was the first time you got involved into crypto and what basically is there a trigger point where you decided where you pro or contra crypto? Is there any moment in time?
My only involvement has really been to criticize it. But I did get a little bit of involvement just recently with a buddy of mine who's an artist, and so I had this painting of a bar gold that I made, and we decided to inscribe the painting in 50 prints on the ordinals. So that was my involvement. These 50 sats that now have been inscribed with a painting of a gold bar. But that was the limit of my involvement. But at least, I was finally able to find a little use case for Bitcoin. Not that I think it means that it has much value, but at least I did something with a Bitcoin, because that's more than most people do with it. They just collect them, and then they trade them. But that's about it. People gamble with them.
Well, you skipped forward my utility card, which is way back here, but we will touch that.
Well, it's a very small card.
Nick, sorry for skipping over you. Can you share what your background is and also what your Genesis block is in crypto, if there is one?
Absolutely. Good evening, guys. My name is Nick Patel. I'm the founder of Bank of Bullion. We're actually a physical metal supplier based out of Dubai. We had a pretty small, humble beginnings back in 2016, a couple of kilos a day. Today we're selling physically over 100 kg every day. Post-COVID, I noticed there was a problem shipping gold around the world, even to the small and very heavily, sort of heavy in terms of turnover markets of Dubai. So what I did in 2021, we launched Clink Gold, which is basically tokenizing mankind's oldest asset and providing a digital twin for the real deal, for the real gold.
Interesting. Yeah, to start the discussion, I think we should have a broader picture on the macroeconomic situation we have right now, and that obviously is driving the whole discussion about Bitcoin and gold as well. Inflation finally showing. Everybody who was in the financial markets obviously was aware that there is inflation of asset prices, but now we see that finally in the CPI as well. The debt ceiling has been pushed again, now with 32 trillion debt in the United States. Quite a large number. I think, Peter, you shared that earlier in the workshop. It was 1 trillion in the 1980s?
It first got to $1 trillion in 1980, yeah.
Yeah, so, I mean, that is moving 2 trillion a year, so this could be interesting. And there's the discussion if the US dollar will remain the global reserve currency. Any comments on that situation, and why is it important to monitor that, and how will that drive the basically how people invest in either Bitcoin or gold? Peter, you want to start?
Well, first of all, inflation's been here for a long time. It's just only recently that it's become a huge issue because it's more pronounced in consumer prices. It was a little bit lower for a while, partly because the government doesn't measure price increases accurately, so they've been able to pretend that the annual rates were acceptable or below 2%. In fact, for years and years, it was the goal of the European Central Bank and other central banks to create inflation. They told us that we didn't have enough inflation and that we needed more, and they succeeded. But we never needed more inflation, and inflation is the expansion of the money supply. That's what it is. And prices react to that. And so when inflation causes stock prices to go up, it's not really stock market inflation. It's inflation, and stock prices have risen as a result of it. And now commodity prices are rising as a result of inflation. And ultimately, that's where all inflation ends up. It may start out in financial assets, but it will end up in real goods. And that's where we are, and we're just getting started, because the amount of inflation that has been created by the central banks, not just the Fed, but all the big central banks, for more than a decade, close to 20 years, the pipeline is huge. And so this is the tip of an iceberg that we're seeing now, and the likelihood is that inflation accelerates, because during the decade or more where we've had all this money printing, governments have grown enormously in size. They have taken advantage of the cheap money and borrowed it and spent it, so that the budget deficits, not just in the United States, but deficits all around the world. And so that means that more and more money will be created in the future than has been created in the past. And so there's just so much inflation that we're headed for. That the rates are going to end up being much, much higher. Just that the public and investors haven't come to terms with this reality yet.
Okay. Nick, from your client side, do you see that the rising awareness of inflation, is that already reflecting the demand from your client?
I wouldn't say the rising inflation is creating the demand. The fact is the dollar is being printed relentlessly. That's a big problem. The first question you asked, Peter, I'd say quite categorically, I don't think the dollar will last that much longer. I think it'll lose its status as a world reserve currency. And, history has shown when a country is running debt in the same way the US has, its military spending is excessive. If you look 300 years back, whether it's the Dutch guilder, the British pound, and now the dollar, they all had histories around the same sort of timeline. And in terms of inflation, does that create a demand for gold? It does, but the beauty with gold is very simple. If you look at the stats of the World Gold Council, there's only a couple of 100,000 tons in the world, of which 150,000 tons have been mined. So realistically, it's the same stuff going around. And the other problem is, you mentioned, does inflation create a demand in the price or in gold? If that is the actual case, then why is the price of gold not getting any higher than what it is? Now, I would argue that it's all the extra ETFs, or it's some outward pressure keeping the price of gold at its current level. And if you consider the total value of gold in the world, if we go by the metric of the World Gold Council, what, $11, $12 trillion? Now, who holds all the gold in the world? Is it the west side of the world? Is it the east side of the world? Now, I'd argue that it's normally Chinese and Indians, right? They tend to be savers in gold. If you change the value of gold from $1,900 to $3,000, that's going to create a lot more wealth on the other side of the world, and perhaps there's certain people on the West that wouldn't want that. So inflation should be the hedge, or gold is the hedge against inflation, but I don't think it's reflected in the price.
Okay. Inflation hedge has been one of the major narratives for Bitcoin as well. And obviously, so far, it hasn't really stand the test. What we realized last year with inflation going up, that a lot of people saw Bitcoin as a risk-on investments, which is strange for those really believer of Bitcoin. It's not that much a risk-on, it's rather risk-off asset. Olga, how can you explain why it hasn't fulfilled the purpose of inflation hedge so far? And will that change? Has it already begun to change?
Well, how to explain it? Bad timing. Bad timing, because, you know, guys, like everybody who is in crypto, you know how the price dynamic works, right? Bitcoin is a driver, and every 4 years, you know, the issuance cycle hits the next milestone, the issuance rate halves, right? So there is much less Bitcoin comes, you know, with the mining of the blocks, right? And this is what is driving prices. So the inflation came at a bad timing of a Bitcoin where we have a bear market, right? And obviously, you know, if you take two trends, on one side, yes, inflation, even in the Western world, what we are absolutely not used to, right? And that would be, you know, the force to drive the, you know, the demand for Bitcoin. But at the same time, we had like the worst time in crypto markets in Bitcoin when the price is down and down and down, right? Like we started this year at what, 16,000, right? Like so low. So obviously when the price is that low, very few people are buying. There is a statistics, very interesting, showing that 80% of the volume of Bitcoin and crypto is bought at the 90% percentile highest price, right? Completely irrational behavior that is typical for investors. So obviously now nobody's buying. That's why we don't feel it.
I mean, it was bad timing, but obviously some self-made issues in the crypto world, in the centralized part of the crypto world as well, coming into play in the last year. The main task for an asset manager fiduciary is to protect the wealth of its client. And there are some who say it's about 3 to 5 to 10% in assets like gold to protect that. But there's also the discussion going around talking about inflation and how basically this will play out in the future if you have basically to exit the system, the fiat world, and invest totally in outside the fiat world. Is that a narrative which is, for those who believe in gold, already happening, or is this a narrative you find only in the crypto world? And is that changing the ratio of investments into Bitcoin old?
Yeah, well, first of all, I would think
microphone, Peter?
Oh, sorry. Yeah, the majority, I think, of investors, and certainly, institutional investors, public pensions, endowments, I don't think they have really much any gold exposure at all, and I don't think they have much crypto either. I do think that with respect to gold, that is going to change over time. I think it's, you're going to see some more institutional investors looking for a store of value in bear markets and an inflation hedge. And I think gold, would qualify. I don't think Bitcoin is an inflation hedge at all. I just don't think that's, in order to be an inflation hedge, the reason gold is an inflation hedge is because it's a commodity. And so gold has a historic price relative to oil, wheat, soybeans, other things. And so when you have inflation, paper money is losing value. You need more money to buy wheat. You need more money to buy oil. Well, if you have gold, you may not need more gold to buy oil because those relationships could hold, or in fact, it could improve in gold's favor, whereas the price of wheat is going down in terms of gold, even though it's going up in terms of paper. So Bitcoin doesn't have any actual real-world use, as you can't compare Bitcoin to wheat or oil. It doesn't have a relative price. It has no historical relationship to anything else. So I look at it more as a speculative asset, if you want to call it an asset, and so I don't think the risk reward is good in Bitcoin. If I want to speculate, I think there are other assets to me that have a lot more upside potential than Bitcoin from 30,000 wherever it is, and with a lot less downside risk. So to me, it doesn't seem like an area that I'd want to speculate. And I don't see it as a store value or safe haven. But gold, I think gold should be in people's portfolio, but people should not be exclusively in gold. Gold is not an investment. It doesn't have a yield. It doesn't generate any income. It doesn't have any real growth potential. It's just a commodity. But it has a lot of uses, and historically, it's been used as money. It may not be used as money now, but it is money. Central banks hold it as money. I think central banks are going to own a lot more gold in the future than they own today, especially in the East. You're talking about China, India, those countries. The people may own gold, but the governments own very little in relation to the dollars that they own and the euros and the pounds that they own. It's the Western central banks that are highly indebted that still have their gold, and they may end up losing it. But there are a lot of other things that belong in a portfolio. A lot of assets, value stocks, dividend-paying stocks, real estate, things that you can own. But gold should be included as a kind of like a safe haven, store of liquidity. If you think, stocks are expensive, if you think real estate is expensive, and you want to wait, where do you wait? Where do you keep your dry powder? I think gold is much better than a fiat currency.
So obviously, for the record, I have to respectfully disagree. Bitcoin has a hedge character, and it has been the best performing asset across all categories in the last 8 years, outperforming everything else by multiple 4-5, right? That's just statistics. We don't even need to discuss this. Of course, it's much more volatile than gold, right? And that makes it imperfect hedge. But its supply character is much more perfect than gold because it's mathematics. We don't need to guess what is on the ground and how and what, right? It's 21 million. It's math you can trust. And for a lot of people, in the third world countries, and believe me, I know what I'm talking about because I grew up in Ukraine and I went through 5 years of 10%, 10,000% inflation. For a lot of people in these countries, the invention of Bitcoin is key to financial freedom, financial safety, financial inclusion. So the utility of Bitcoin and the function and the usage of being alternative financial system, we cannot just put it away today anymore.
Well, you have to, first of all, ask you can't just look at a price and say, well, Bitcoin's gone up a lot in 8 years, and that means it's a store of value. Just because something's gone up doesn't mean it's going to store anything. I don't disagree that people have bought Bitcoin and the price has gone up. Now, I think more people have lost money in Bitcoin than have made money. I think a lot more people, as you said, bought Bitcoin at $60,000 than at $6. But there were people that got in early on and made a bunch of money. But the fact that a speculative asset went up doesn't convert it to some kind of store of value safe haven. It doesn't have any of those characteristics. And another point you could address, yes, the supply may be limited to, what is it? Is it 1.2 or 2.1 quadrillion Satoshis? That's the limit, right? There can't be more than that, which is a whole bunch. Everybody can have hundreds of thousands of these things. But the thing is, the limited supply means nothing if there's no real demand for it. Gold's supply is limited, and that is important because there are things that you need gold for that only gold can do. There's thousands of cryptocurrencies who have properties that are identical to Bitcoin. I mean, in fact, there are a lot of cryptocurrencies whose properties are better than Bitcoin. I mean, Bitcoin is a little bit more well-known and has some more infrastructure around it, but there's nothing really unique about it. And so just because there's only so many Bitcoin, there's an unlimited number of altcoins that can compete with Bitcoin. You don't have an unlimited number of metals, and even the metals that exist, they don't have the quality, the characteristics of the precious metals, and even of all the precious metals. I mean, they don't all have the characteristics of gold. So gold scarcity is a lot more relevant and important than an artificial scarcity of a cryptocurrency that we've created and just decided, arbitrarily to put a limit on the quantity. But, there's unlimited numbers of other currencies, cryptos, that could do the same thing.
And 400 million wallets that use Bitcoin today. So there is a use case.
What do they use it for?
To store the value.
No, they don't. Nobody buys Bitcoin to store value.
To store the value, to expect the growth, to invest.
People are buying Bitcoin because they expect it to go up. They're not expecting it to stay stable. Otherwise, they wouldn't buy it. They think they're going to get rich. That's why they're buying it.
Exactly.
So that's not a store of value. You don't buy stores of value to get rich.
Store of value, in a perspective, was increase of the value, right? I invested back in 2013. That enabled me to become an entrepreneur.
Yeah. Yes.
Fund my company.
Yes, you did. You didn't buy a store of value. You bought something that was speculative, and it went up. Congratulations.
And
you
I
made
still
money.
hold to it. So for me, it's a store of value, guys.
No,
and I'm going to hold it in 50 years.
Olga,
It went up.
It's a crypto conference.
over the last 25 years, I've done extensive work in Africa. You mentioned the inflation in Ukraine. And one of the things I always find when I'm in Africa, and obviously I get a lot of my gold from Africa, if I had the option, or they took the option of would they accept 1 gram of gold or one same equivalent in Bitcoin, they'd likely take the gold. And that's 1.4 billion people across the continent. Now, you mentioned 400 million wallets, and probably 90% did lose money. So again, it is a speculative investment. It is not a store of value. You just got to understand the definition. If you're storing value, you need something that is pretty much going to stay at the same price. That's a store. It's in the name, store of value. It's not a speculative, it's not a stock, it's not a share, it's a speculative object, right? And I like Bitcoin. I'm not saying I dislike Bitcoin. I'm actually I think it's a good product to speculate. If you want to trade it, if you want to play with it, if you want to make money, if you want to short it, put options, whatever.
No.
BlackRock putting ETFs, whatever you want to do.
Like,
it's great to make money.
I'm holding to it for 8 years.
But you got lucky.
I'm not, no. Like, come on, lucky.
Did you know it's going to go to $65,000?
Today's the value of crypto assets is like what? I don't know, 2 trillion, like it was 3 trillion, right? Okay, deduct the altcoins, but it's still, and this wealth has been created.
If somebody bought it at $60,000 2-3 years ago, and now it's at 30,000, what have they stored?
2 years ago. Right?
All right.
2 years ago.
All right. So they bought it at 60,000 2 years ago.
So what?
And now it's at 30,000.
Yes.
What have they stored?
They store that the next bull cycle, and I've been, cited in a lot of press for this. The next bull cycle, we're gonna hit at least 150,000.
Well, how do you know that? What if the next cycle takes it to 10,000?
This is my prediction. I did my math, and I believe in that.
Right, but it's not guaranteed.
It's not guaranteed. There is no guarantee. Like gold is going to move to what did you say? 50,000, right? Like there is no guarantee about none of this.
It's not a store of value. Therefore, it's a speculative object.
For me, it's a store of value because I hold for it now for 10 years. This is for me is a store, and I'm going to pass it to my children, you know?
In the defense of
So you're saying it's in the eye of the beholder then. You think it's a store of value, even though it may not be.
yeah, but that is all money is about. I mean, it's a set of group aligning to it that this is a store of value, and if enough people believe that, then it becomes a store of value. The same.
What
as
you're
gold became a
doing
store of
is you're
value.
confusing price and value, because Bitcoin has a price and its price has gone up. It doesn't have value. You can have value and a price, but in the long run, value is what determines price. In the short run, it's got nothing to do with it, because people can buy something based on whatever they believe, right? And that's a Warren Buffett thing, who criticizes Bitcoin, but he says price is what you pay, value is what you get.
Yeah.
You can buy Bitcoin right now, and you could pay $30,000 for a Bitcoin, but you're not going to get $30,000 of value. You're just paying a $30,000 price. And if somebody wants to pay $40,000 in the future, then you might be able to sell at a profit. But if people no longer want to speculate on Bitcoin because they no longer believe the price is going to go up, the price will crash.
So I think, Peter, you're confusing the...
Why not?
Because gold has a huge market of people, industries that need gold. They don't care about the price. They need to buy it. And there are a lot of companies that would buy gold, but the price is too high. And so they're buying another metal that's not as good, but it'll do based on the cost. But as the price of gold comes down, more demand for gold naturally exists. And the industries that are using gold, as the price comes down, they will take advantage of the sale to buy more and build up their inventory, because they know they're going to need that gold in the future. So you have this natural buyer for a real commodity for gold. You don't have that for Bitcoin. There is no underlying reason to own Bitcoin. Nobody needs Bitcoin. People want it because they think the price is going to go up. If the price stops going up, they won't want it. If this price starts going down, they want to get rid of it.
Guys, anybody need Bitcoin here around? Oh, you see, Peter, we prove you wrong.
Olga, I also hold Bitcoin. I'm not saying it's a bad asset.
Bitcoin, but I can't send them gold shekels. So what do I do, Peter? What do I do? If I have a global company and I have developers across, say, in another country, and they see value, do I say, hey, you know what? I'm going to go ahead and take my gold shekels and I'm going to mail it to you? They say, hey, you know what? Bitcoin.
Well,
You can buy clean gold.
well,
There is a
I don't know if
utility.
you have
There
if you
is a
have
utility
developers
there.
that are willing to barter with you their services for your Bitcoin, then you can do it. But it's barter. It's not a monetary transaction. But no, but you can send any other cryptocurrency the same way. But you can also do the same thing with gold. You can have gold. No, yes, you
Tokenized
can.
gold. Tokenized gold.
No, you could take gold and tokenize it. You could have ownership of gold represented by a crypto, and then you can send that gold faster and cheaper to your developer without using Bitcoin and taking the risk that Bitcoin collapses. No, I didn't.
Guys, let's keep the conversation on stage.
No, that's not utility. You are simply.
It doesn't even make sense.
No.
You literally said Bitcoin has no utility. And I said,
What can you? All right. Other than give it to somebody else, what can you do with Bitcoin?
I just told you. Pay
No, you told me you can give it to somebody else. No.
and I
Other.
across the seas.
Yeah, I can do the same thing with gold. So why do I need Bitcoin?
Maybe let me sound your opinion. So because we also have
I didn't say you
developers
can't-
in
I
Ukraine, we
didn't
have
say you can't
developers in
transfer.
different countries. So yes, indeed, it's difficult. We had, for example, developers in Belarus, in Minsk, right? And as the war in Ukraine started, how we even send them money, right? Or the first help to Ukraine, guys, the first 100 million, they came with Bitcoin, right? They came through crypto. So there is an enormous utility to this world, right? Peter, sorry, that's crypto conference, you know?
You can do the same thing with 20,000 other crypto tokens.
But there's a common belief that Bitcoin is the only cryptocurrency with a monetary value premium, except maybe for Ether at some point of time. But no other cryptocurrency will have that status like Bitcoin has.
Well,
I mean,
you don't
what
know.
are the
You don't know what the
currencies?
future holds. I mean,
for every digital network which has grown that big, no other network was able to overcome that. But Peter, you said there's basically a floor for the gold price, which is the utility in industry and jewelry and what it is. Is there a ratio? Is it 10%? Is it 50%? What would be basically the price for gold if it wouldn't be as a store of value?
well, first of all, gold is not even being used as money today, and it still has a pretty high price. Central banks are holding it. Again, they should be holding more, and they will hold more. But there's no way to know for sure if people stop storing gold. But again, one of the reasons people store gold is to use it in the future. Even though they're not going to use it, they're storing it for somebody else who will. Because gold doesn't decay, it doesn't tarnish, it doesn't break down over time. And so when you've mined gold, you've mined it for somebody to use it in 100 years, in 1,000 years. So all of that future use of gold is accounted for in its present price. And even if somebody buys gold jewelry, that gold is still there. That jewelry can be melted down, and that gold hasn't lost anything. There are very few items that can be used over and over and over again and never diminish in their property. So there's a lot of value that has to be put into the current price of gold. But I can't figure out exactly if everyone decided, hey, we're not going to use gold as a store of value, we're just going to store something else, which is I mean you could store oil. It's hard. It's expensive to store, to have big, vats of oil, and move it around. I mean, gold is a very efficient commodity to store. There's not many other commodities that lend itself to that type of, low-cost storage. No, but you're not storing anything when you're storing Bitcoin. You're not storing anything that anybody can use. It's nothing. It is.
I mean.
You don't use it for anything.
Calm
you
down,
give
everybody.
it.
Calm down. Peter,
You can send it to somebody else. That's not use.
I mean,
it's a hot potato.
I mean, you make the point basically that gold is durable. I mean, the same goes for Bitcoin. So my question just was, what is basically the utility value of gold? And what I understand is that's not an easy question to answer. What the utility value of gold?
No, you said if I tried to strip out all the extra demand that comes from gold because it's being stored. I mean, it's always going to be stored because you're not going to use all that gold. You're going to hold on to it to use some in the future. So, and there's always a value there. But at least gold is something. It is something that is real. It is a precious metal. It is the most useful metal on the periodic table. It became money because of its usefulness to mankind, its desirability, its value. That's why it became money. That's why it was a scarce luxury good that had a lot of value. I mean, Bitcoin had nothing until people decided to trade it. It wasn't being used for anything. And yes, now it's a token. People have gotten rich who got in early. People who have lost a lot of money who got in late. But at the end of the day, all you have is a digital collectible that is not really scarce in that there's, a Bitcoin is an arbitrary quantity of Satoshis. I don't need a whole Bitcoin. One Satoshi does as much as a Bitcoin, which is nothing. And so there's no scarcity of Satoshis. I don't care how you want to bundle them and package them up. And there's 20,000, I haven't checked recently on CoinMarketCap, how many other cryptos there are. Who knows how many will be invented or created in the future. The supply is endless, but the demand is not. Eventually the demand will go away and the price will crash.
Let's talk about regulation, maybe.
Regulation, exactly. But maybe just also one point to Peter's. I am with you, Peter, on one thing. I think gold is very useful. And for me, it was amazing discovery, probably, when was it, 2017, first company started to tokenize gold, right? And we, Smart Valor, we were the first exchange in Europe to list tokenized gold, issued by Paxos. And, you know, Paxos is really doing a decent job of, you know, taking the physical gold, putting it in segregated vaults, securing it, and issuing the token for this, right? So it's 100% backed by gold. And I do think it's very, very valuable, especially, again, for developing world, for, you know, third world countries, because there, you don't have access to two important things. You don't have access to physical security. Like, there is nowhere you can put this thing. Like, where in Ukraine or in India you can put it. It can be stolen, right? Like, there is no physical security or institution securing it that you can trust. And B, you don't have access to financial systems, so you don't have access to gold ETFs, to all this, you know, instruments that we have access here in the West. So it is a problem. How do you even hold gold if you're out there, right? And tokenized gold, what you believe guys also doing, right? Tokenized gold is a solution to this problem, because now I can own gold, like super high quality, stored in London vaults, and it's just a token, and I can send it to you in seconds, right? And then you have it, but we never exchange the physical good. So this is amazing, amazing, you know, invention. And it's not either Bitcoin or gold. I think everybody should have a bit of both, right? A bit of gold, a bit of diversification. That's how you build the wealth in the portfolio, right? So I'm not against the gold. It's just like now we have the evolution, a better form of gold. That's I think, the breakthrough.
I just don't think it's a form of gold at all. It's something totally different than gold.
But it has the properties of safe money.
No, it doesn't. It doesn't have any of the properties of, well, because the most important property of money is that it be a store of value. And in order to be a store of value, you have to have value to store. Bitcoin doesn't have any value. It can't be stored. Now, what Bitcoin has replicated are other properties that would be built on top of that, such as portability, divisibility, you know, stuff like that. Yes, Bitcoin is divisible, but when you're dividing Bitcoin, you're dividing nothing. So what? When you're dividing gold, you're dividing something. So it doesn't matter that you can divide Bitcoin, because it's not worth anything anyway. So far, yes, you can port it. You can port it around because you're porting nothing. If I send you my Bitcoin, yeah, I can send it around the world because I've sent nothing. Right? So it's very easy to send it around. So yes, it has all these other characteristics, but it's missing the single most important characteristic of the metal of gold, and it doesn't have that. So it is not digital gold any more than I can have a digital apple and claim that it's food. You know, it could look like an apple, but I mean, I'm going to die if I have a diet of digital food.
Well, but if everybody agrees that Bitcoin is the store of value, I mean, that would basically be the same like everybody agreed that
well,
gold
if
is
you could
the store
get
of value.
everybody in the world to agree on it, and they never change their mind, you know, but it's hard to get that many people to agree on something forever. You know, it's like, I don't want to put my faith on a mass delusion, you know, continuing in perpetuity, right? I'd rather own something real that I don't have to gamble that people are going to want it because they believe in it, right? But yeah, you have a lot of people in this room who believe in Bitcoin. They're just completely, you know, believe in it. Like it's a cult and you just believe it. And that's great.
Yes, we do.
Know? But you have to get more and more converts into it. More people have to believe in it in order for it to continue. Because otherwise, the price is going to fall.
Exactly, and that's exactly what is happening, right? We went from 100 million wallets. No, it's on-chain data. You cannot deny it, you know? There were 100 wallets. Then I think like 3 years ago, there were 200 million wallets.
Yeah, but a lot of people own multiple wallets. You know,
yes,
you got the same people who have a whole bunch of wallets.
There is a way to identify unique wallets, how they exchange
I think fewer companies today are even marketing to Bitcoin than in 2017. I remember 2017, oh, this company, we take Bitcoin. I mean, people have lost interest. I mean, even Elon Musk experimented with taking Bitcoin for Teslas, and then he stopped doing it. But I mean, it's the only thing I've seen in the 12 years I've observed Bitcoin and seen the price go up is there's more people gambling on its price. That's all that's happened. It's not like used more. It's just there's more gamblers in the casino. But I think that peaked in 2021 timeframe with all that hype, with when Bitcoin went to 70,000 or got almost 70,000, when it had the Super Bowl commercials and you had the FTX and all those other big scamsters out there buying ads on television, all those networks, nonstop Bitcoin promotion, anchors on all these financial stations, everybody all in on Bitcoin, El Salvador, Michael Saylor, all this stuff, NFTs, all this kind of stuff that happened. I think that was the end of it. That was the mania. That was the peak, and the price went down. Think about it. All that money spent hyping Bitcoin, and the price went down.
It went exactly as expected, as the previous 3 cycles, right?
Assume this, in 10 years' time, there's going to be probably better technology than Bitcoin, okay? So something new will come along, a better algorithm, some more utility, some more uses. It might be cheaper, faster, more economical. In fact, it'll probably work even without electricity. Would that be a better thing than Bitcoin? Would that be a better store of value? So the technology right now, it's the only option we have, right? That's the most thing that is available. If you ask somebody cryptocurrency, the first thing they'll say is BTC or Bitcoin. That's what people know.
Nick,
nothing better has been developed.
There's no point in discussion if you would rebuild Bitcoin today, that you would probably build a better Bitcoin from a technology perspective in how it reflects the property of money. But you could also build a better Amazon and a better Facebook and a better Instagram. But it wouldn't make any difference because the people will still need Instagram and Facebook. They won't switch because Instagram.
What happened to Yahoo? Yeah, but everyone left it. What happened to all these small internet companies?
Wasn't big enough. But maybe one thing we might agree on, and basically what you said in the workshop, talking about monetary policy, that was basically the first half of the Bitcoin standard. So I think there's a lot of common ground we share here on the panel. One question, should state and money be separated?
Absolutely. I don't think government should have anything to do with money. I think you want to keep government far away from...
Oh, this is a good one, right? Let's acknowledge.
Not only, especially, and I think the worst thing would be to give the governments the centralized digital currency. But governments use money to control and tax. And I think that the most oppressive form of taxation is inflation. And as long as the governments control the money, they'll tax us through inflation.
It's not even taxes. Taxes are legal. Inflation is illegal redistribution of wealth, right? Because there is a group of people that cannot observe in real inflation and cannot deal with that. And there is a group of people, mostly banks and the government, the issuing party, that control it, right? And it's a pure way to redistribute wealth at the largest scale possible. So the comparison with taxes does not work. Tax is legal. Yeah. Hyperinflation is illegal.
So just if we agree on separating state and money would be a good thing, which basically store of value would be the better mean? Which one is more censorship resistant? Is it Bitcoin or gold?
Bitcoin.
It'd be gold because Bitcoin is traceable. Gold you can hold and nobody would know you're holding it. Bitcoin you can trace and you know exactly who's holding it.
Depends on the
Depends on the wallet, depends how you do it, if you're on central or decentralized. But if you really wanted to find out, you can.
Well, I'm not talking about it from the point of view of hiding it from the government, just as far as what would work as money in a free market, and gold would work. We know it would work. It's worked before. Bitcoin has never worked. It's never been money.
Well, how it's going to work if I want to transport 100 million of gold? How is this supposed to work? Do I load it into the big car and how do I transport it?
We've tokenized gold as well, right? You mentioned Paxos 5 years ago, so that's already been done as well.
Exactly.
So that doesn't happen anymore. We don't need to make those big maneuvers.
But in terms of traceability, right? Then this argument of gold that it's less traceable, then it doesn't work because I cannot transport it, right? I can just transport that much, right? But if it becomes a big, big
that's the whole point of tokenizing the gold, so you don't have to transport it. You don't have to make mass maneuvers. You can put it in one secure vault held by an independent party, and then you can tokenize it and use it as a payment system.
Exactly.
The point is, Well, we use Brinks. It's the oldest security company in the world, 164-year history.
They've never lost
70
an ounce.
country, and it's been around since, 164 years. Who won? Controls it?
I trust the third party to hold with my value, and I just move around again the token, which has no value, as you said before. So why is that better than moving around the token in the first place?
Because eventually, if all goes, let's say the world switch off electricity, how are you going to transfer your BTC? What are you going to do? If you don't have electricity, what will you do?
I have one suggestion to Mike.
You need to have some tangible asset.
Nick, I have one suggestion. Just carry on the discussion outside with a glass
Thank you.
of beer
Thank
or
you,
wine or
everybody.
whatever.
You've been
Thanks, everybody.
amazing audience, guy. Thank you so much.
It was fun. Thanks.
Thank you, thank you, thank you, thank you.